and welcome to the Warrior Trading Channel. Today, we're going to explore one of the most popular technical indicators in trading, the stochastic oscillator. This indicator is designed to help you identify overbought and oversold conditions in the market and make informed trading decisions. Are you struggling to predict market trends and identify buy or sell signals? Today, we're diving into one of the most popular and powerful technical analysis tools, the stochastic indicator. Whether you're a beginner or an advanced trader, this video will give you everything you need to know to master this tool. So, stay tuned till the end. This video divided in 3 parts. Number 1. What is the stochastic oscillator indicator? Number 2. How does it work? Number 3. Trading strategy. What is the stochastic oscillator indicator? The stochastic indicator is a momentum oscillator developed by George Lane. It compares the closing price of a stock to its price range over a specific period, usually 14 periods. It consists of 2 lines. %K line, fast line. This is the main line that shows the current closing price relative to the range. %D line, slow line. This is the 3-period moving average of %K, used for smoother signals. The indicator ranges from 0 to 100, making it easy to spot overbought and oversold conditions. How does it work? The stochastic oscillator works on a simple principle. When prices close near the high, the trend is strong, and when they close near the low, the trend is weak. Key level: above 76, overbought zone, price may reverse downward. Below 24, oversold zone, price may reverse upward. However, don't trade blindly based on these levels. Always wait for confirmation signals, such as crossovers or divergence patterns. Number 3. Trading strategy. Strategy 1, overbought and oversold signals. Show a trading example where price reverses after entering overbought/oversold zones. When the indicator moves above 76, it signals that the asset is overbought and might be ready for a sell trade. Similarly, when it dips. Strategy 3, divergence trading. Highlight divergence examples where the price and indicator move in opposite directions. Look for divergence patterns between price and the stochastic indicator. Bullish divergence: price makes a lower low, but the indicator makes a higher low, a strong buy signal. Bearish divergence: price makes a higher high, but the indicator makes a lower high, a strong sell signal. your trading. Success with my expert signal service. I provide 5 to 10 daily trading signals to help you make profitable trades. Simply subscribe to my YouTube channel for market analysis and join my Telegram channel to receive real-time signals. Check my track record to see my successful trades. By following my signals, you can increase your profits and achieve financial goals. No experience needed, my expert guidance helps you trade with confidence. Thank you for watching. Join me in the next video for more trading insights. Must subscribe my YouTube channel and Telegrams for more videos and updates.